But let's focus on what's happening with Metropolis. We thought we'll talk about the strong volume growth that they've seen in the first quarter, whether or not pricing power is back with the organized diagnostic players or not, considering most of these stocks are holding up very, very smartly in an otherwise weak market. Ameera Shah, the MD at Metropolis Healthcare, joins us on the show right now. Ameera, hi, morning. After a decent first quarter for the diagnostic sector, the share of companies have been re-rated. What do you think has happened? I mean, is there some sort of ease of competitive intensity that's at play in the sector right now?
No, I think what's happened is, initially, of course, when the, first couple of listed companies, peers listed, I think there was a very broad assumptions about the diagnostic sectors. I don't think investors, analysts really understood the differences between the companies who were building really good quality business, sticky business. Everything was considered that, okay, if you're in the sector, then you deserve to get a certain value. And I think over time, investors and analysts have gotten smarter and have been able to differentiate between the companies who are really, here to build the firm, sort of long institutions, long term, and who are building quality of business. And I think, therefore, the valuations are getting more and more differentiated. So, I mean, for Metropolis, we've had a good first quarter. We saw strong volume growth, almost 20%, which was much higher than our listed peers and definitely the unlisted peers. And I think the market is probably recognizing the potential of the business.
Awesome. Ameera, good morning. Competitive intensity across the sector has, put a cap on price hikes, let's say, over the last few years versus the 2 to 3% price increase earlier. Do you think that now we're going to start to see some more room for that going ahead, or is it going to continue to be a volume game primarily?
See, again, we have to understand the sub-segmentation in the diagnostic sector. There is the B2C side, which actually you have some amount of pricing flexibility, and Metropolis actually has been doing incremental price increases the last 3 years as well. So there hasn't been any sort of stoppage on price increase. We've been very careful, though, to do only incremental price increases and nothing drastic, because we want to make sure that the price difference between the organized sector and the unorganized sector does not keep increasing, because the idea here is to move and consolidate more of the unorganized sector towards the organized. So we've been more careful. But if you look at on the B2B side, there's again two segments. There's a semi-specialized segment and a specialized. The semi-specialized segment is where you're seeing price competition and intensity, where I think most firms have been unable to really do price increases. I think on the specialized side, which is actually what Metropolis focuses on, where 40% of our revenue comes from specialized services and tests, we again see more of a price elasticity because the competition is lesser. It's a very sticky business. And not everybody has the capability to do these tests because the technical expertise required is very high. So I definitely, there is a less number of competition and new players who've come into the industry in the last 2-3 years. Because I think a lot of the people who came in between 2010 and 16 are suddenly realizing this is not such an easy business. And a lot of them are up for sale, and people are realizing that this requires a much longer term commitment to build a solid diagnostics business.
Sure. Ameera, when we look at the organized space, growth in all the 3 to 4 listed players is very strong. Are you seeing a shift from unorganized to organized happen at a faster pace? And do you think that is something which is giving a bump up to the organized guys such as yourselves? And do you really think growth in preventive care is one of the key reasons that one is seeing this shift in the organized space wherein people are moving away from the unorganized sector?
Actually, no, to be honest with you, the main catalysts which will actually make the shift from unorganized to organized happen in a fast pace have still not happened in the industry. Those are still to come in the next few years. I think today, whatever shift and consolidation you're seeing happening, it's taken the industry almost 15 years to come to almost a 15% organized contribution as a percentage of the total industry. And if these catalysts come in, like the ones I'm referring to, like government regulation, like insurance, then I think we would see a much faster shift towards the organized sector. But in the absence of these catalysts, I think we will continue to see a more gradual shift towards the organized sector. And this is happening more because consumer aspirations and consumers are changing. So consumers are realizing that they want not only convenience, which they used to get from the unorganized sector, but along with convenience, they want good infrastructure, they want good experience, they want good quality, they want a report that they can trust. And that's why they're reaching out, to some of the companies in the organized sector from a B2C perspective.
Right. Ameera, how are factors like rising income, insurance coverage for diagnostic services, including outpatients, for example, all of these factors, how are they helping growth in the sector now being faster than anticipated as well?
Well, as of today, actually, there is no insurance coverage for diagnostics on an OPD out of hospital basis. If you see all the insurance policies that exist in health today are all mostly focused on hospitalization and cashless hospitalization. So if you see for hospital companies, the top few hospital firms, while almost about 10 years ago, 0% of their revenue used to come from the insurance channel, today almost 50-60% of their business comes through the health insurance channel. But for diagnostic companies like ours, again, less than 1% of our business comes from insurance as of today. And as and when these companies do start covering diagnostics out of hospitals, we will see a huge change and revolution in the industry, because the biggest issue today with patients is affordability. People are not able to afford the kind of diagnosis and the testing that they need, not because the prices are very high, but because GDP per capita in India is quite low. So while, of course, the upper middle classes are able to afford it, because testing is only done once a year, for the middle classes and the lower middle classes, therefore doctors are more careful to prescribe only common routine tests but not prescribe specialized tests even if the patient needs it, because of a challenge of affordability. The minute insurance comes in and starts covering this for patients, I think we will see a boom in the volumes in the industry, and patients will finally get the kind of diagnosis they need.
Sure. Ameera, when it comes to PE players 5 years back, they were very active in the market. But do you think that funding has stopped? And do you think that is the key reason why pricing may be back in focus for the sector per se?
You're right about the fact that there was a little bit more PE funding, between 2010 and 16. We saw maybe about 3 or 4 PE deals that happened in that period. It wasn't a whole bunch. It was about 4 PE deals. But what's changed, I think, is that every sector goes through some amount of maturity. And I think our sector has gone through some amount of maturity in the last few years, where earlier when private equity firms were jumping in, everybody wanted to fund diagnostics. I think the assumption was that any company you fund can scale and can scale profitably. And I think with the 4 or 5, deals that have happened, people have seen actually that it's not so easy. One, a lot of the companies that have been funded have not managed to scale. Definitely nobody has been able to become a pan-India player. They've not been able to move out of their regional territories. And most importantly, they've not been able to scale profitably. So when private equity companies have seen their peers burn their hands in some cases in the industry, I think there has been more caution in saying that let's not just go and fund anybody and everybody. And which is where I believe that actually the existing leaders in the industry have the best chance to continue to consolidate, because actually building a pan-India brand and a pan-India quality mechanism and an infrastructure that doctors and patients recognize to be credible is actually quite hard.
Okay. When we look at B2B and B2C, Ameera, there has been some heavy discounting in both. Has this now become a little bit more rational? Do you see, less, of that going forward?
So I think on the B2B semi-specialized side, you're right, there has been quite a lot of discounting. I don't think that has abated yet. I think that continues to be the case. But on the B2C side, frankly, it's not a business that tries to grow through discounting. It's very difficult to grow long-term and be sustainable. And we've seen companies who've tried that strategy. It's not necessarily worked for them. What we are seeing today is there are some companies more digital platform-led or aggregator-led who are saying that, look, let's discount to patients. And that's happening mostly on the wellness side. That's not happening on the illness side, which is still 95% of the industry. But on the wellness side, because the patient and the consumer is not still discerning on who's offering them quality results and who's who's not, those consumers are tending to go for packaging, bundling, discounted deals, which does not happen on the illness side as much, because doctors are able to still recognize who's able to provide quality services and who's not. So I think this is again a phase. I think this may continue in the wellness for a while, but finally even these companies, the digital platforms and aggregators, will have to at some point think about profitability and think about also not only their own internal profitability, but consumers and doctors may start recognizing that, look, are we really getting the kind of quality of results we need? And I think that's how we'll have to see whether it plays out well or not.
All right, Ameera, thanks so much for joining us this morning and sharing with us, some insight into how things are moving currently. Do have a great day ahead. Okay.
Thank you so much. My pleasure.